So the assets of a business are the things that it owns, that it's going to use to generate value. And if you think about, as an individual, you have assets. You may well own your own home. Even if you're funding that with a mortgage, even if you had to borrow money to buy the house or the flat, you still are the home owner. And that's the same thing for a business. So as we've seen, we split those assets into two main categories. We've got current assets, those things that we're using on a day-to-day basis to generate value. We're converting money in the bank into things that we produce, into things that we sell, to then getting paid and coming back into the bank as money again. They're going around on a constant basis. And a bit later we'll be looking at working capital, which is the term that we use to describe that flow of things in and out of a business. But those are our current assets, the things that we're turning over quickly. The other group are fixed or our non-current assets. So those things that we use over a longer period of time. They're the infrastructure of the business. And the money that we spend to acquire them is capital expenditure, or CapEx. So you might hear that language. Any money that the business spends on expenses and costs and things that they pay that isn't the purchase of capital items, of fixed assets, is called OPEX, operating expenditure. So we have CapEx or OPEX. And those are key terms, and you might hear them referenced in your business. You might get involved in CapEx reviews, deciding where to spend the business's money, which items of infrastructure to invest in next to help the business to do what it's doing, do it more effectively, do it more efficiently, or just keep up to date with change, to refresh the resource that you've got available. But really important to understand, what are the assets of the business? What are the things that it owns that it's going to use to generate value? And then are they the things that it's going to use over a long period of time? And because of the matching principle, we're going to put them on the balance sheet as fixed assets and we're going to spread their cost. Or are they the current assets, the things that are turning over more quickly? So we're going to have a look at the other elements of a balance sheet now.